Opportunity cost affects decision making by making you think about what you must give up for a better option. An example is choosing a parking lot over a playground because of the lack of parking spots in the school. Why income is considered a scarce resource is because it isn't infinite and we have infinite wants. And people should learn to allocate their money because uh, it helps them figure out their wants and needs and helps them spend better and with a better budget. These are some definitions of personal budget. One is income, which is the amount of money you make. A fixed expense is an expense you pay that doesn't change. So like rent, insurance, some other things like utilities sometimes. Variable expenses are expenses that can change, like gas and groceries. Savings is well, usually you save money for a goal, which can be short term or long term. An example would be a house for a long term goal and a vacation for a short term goal. But budgeting is essential for long term stability because overspending can ruin your savings and the expenses that you're obligated to, such as your rent and your groceries. It can also ruin your credit score if you don't pay them. Well, it can ruin your credit score if you budget wrong and can't pay your expenses. This monthly budget is based off of my future career path as an electrical journeyman for IBEW. In Atlanta, Georgia, I would make 77,000 a year, which roughly translates to $6,441 a month. Some variable expenses I would have to pay monthly are gas, groceries, and water/slash electric bill, which can vary depending on usage. Some fixed expenses are rent, gas, and the phone bill, which leaves $3,630 in our budget. And going by the 50/30/20 rule, I would save 20% of my of what's left, which would leave $2,904 to use freely. Here is a comparison chart of the different types of services and how risky it can be for everyone. For bank and credit union, they're both pretty safe and they don't really have high rates and fees, especially for the credit union, which is really low and it's members only. So you get treated better, it's cheaper, and it has low fees. But the bank can be safe because it can be tracked back. But the fees itself from withdrawing and depositing money can slowly but surely add up. Payday loans are short cash loans with very high rate fees, which is bad, but it's supposed to be paid back swiftly so it doesn't add up. Now, the access on all of these are relatively easy except for the credit union, which you need to be a member for. These are comparing the methods of payment. Cash is widely accepted. The debit card is also widely accepted, while credit card being the most widely accepted. Prepaid cards, they're accepted in many places, while paying with a mobile app isn't really accepted as much. There are no fees for cash and overdraft fees for a debit card, which means if you go over the budget that you have and the card, it'll if you spend more than you have in the card, it'll go over and put you in debt. While credit cards have interest late fees, and prepaid card have activation fees or reload fees, and mobile apps such as Zelle have small transfer fees. The benefits of all of them are cash is simple and private. The debit card has easy uses like tap pay and all that. credit card can build credit and have rewards. The prepaid card is the control that you have on spending the money or like adding the money to the card. And for mobile apps like Zelle, it's just fast and convenient. The risk for cash is that it can be lost or stolen. Uh, there there can be fraud with the debit cards. You can gain debt for late interest fees with credit cards. Prepaid cards have limited protection, and the mobile apps have a lot of scams and tech issues with them. Here are some interest rates and consumer decisions within financing. Banks have lower interest, which makes borrowing manageable. Credit unions have the lowest rates and save the most money. Payday have extreme interest and causes debt fast if not paid back in time. Title pawn, high rates, and you can risk losing your car or your vehicle. In some ways that interest can affect borrowing is it increases how much you have to repay the debt. And APR, higher APR means the higher rate or the more debt you pay per year. The most responsible option, in my opinion, is a credit union because they have less fees and are more member focused, which means it's more exclusive to you in a close circle. This is an analysis on credit and loan approval. What credit worthiness means is it shows how likely someone is to repay a loan. It builds character. It shows your capacity, and if you don't pay it, there's something called collateral, which is something they'll take from you, which is used as backup if you can't pay it. Credit scores can affect loans. Uh, well, it can affect loan acceptance because the higher score means better approval chances, and lower score means lower approval chances or denial and higher rates. This is the sample loan or like a sample or an example of how it would work. We're using like the average here. So the borrower, which would be me in this case, has a steady job, steady income, and the credit score is fair. The borrower does not offer any collateral, which means if he doesn't pay it back, there's nothing they could take, which increases the risk for the lender of the credit or the loan. Uh, the guy has made a lot of payments on time, but past late payments, past late payments lower trust slightly, but has made a few past late payments. Monthly income is enough to cover the loan payment, along with some other bills, showing his ability to repay the loan place. If no collateral is provided, then the lender has no access to any valuables if the loan isn't repaid. And since his credit score is fair, it means a moderate risk, and the loan would probably be it means a moderate risk, and the loan would probably be approved with very few conditions. Here's how to prevent identity theft. Think before you click. The best practices to prevent it are to shred sensitive documents, destroy papers with names or account numbers, avoid phishing scams, do not click links from unknown emails or texts, monitor credit reports, check your credit to catch fraud early, use strong passwords, and two-factor authentication. Make passwords long and turn on extra security. Protect your social media. Limit who can see your posts and personal info. Do not log in on public Wi-Fi, and stay alert. What I learned from doing this project. I learned how to manage my money more safely by budgeting, spending, and using secure payment methods, and avoiding high interest loans like payday or title loans. I plan to use banks or credit unions to watch my accounts and protect my identity with strong passwords. These habits help me avoid debt, build credit, and stay financially stable during the long term.